the Vesta Securitization Podcast with Stefan Wagner, unlocking investment innovation. Vesta's end-to-end platform enables securitization providers and investment managers to streamline the life cycle of dynamic investment solutions, ensuring better results for their clients and their operations.
Hello and welcome. In this series, we explore the cutting edge of investment innovation. I sit down with leading asset managers who use securitization vehicles to execute their unique investment strategy.
Probably the major hurdle has been cost to people doing an ETF, and it's hundreds of thousands of dollars, before you break even. And I think that's where AMC's come into their own, really, that they're so scalable from that level.
The information in this presentation is for informational purposes only and does not constitute an offer, solicitation, or recommendation to buy or sell any financial products. It is not intended as investment, legal, tax, or accounting advice. Always seek the advice of your financial advisor or other qualified professional regarding your investments.
I'm here with Hector McNeil, co-CEO and founder of Hahn ETF. Thank you, Hector, for joining me today. You have done quite a lot of entrepreneurial things, but maybe you can share a little bit about your background on what led you to found actually Hahn ETF.
Yeah, sure. I mean, I've been pretty much in financial services since I left university at 21 and started my career as a graduate trainee at the London Stock Exchange. So a great place to start learning, and worked at various investment banks, Morgan Stanley, Nomura, BZW, which is Barclays Capital now. And then I sort of got involved in ETFs pretty much at the start in Europe. I joined a firm called Susquehanna, who are a big ETF market-making firm, and they were starting out in Europe. I helped them establish their ETF business. I was there for 5 years in Dublin. Set it all up from scratch. And then I went to be one of the founders and owners of ETF Securities. I was a co-CEO there, co-founder, 10% owner. We were famous for inventing gold ETFs, did the first gold ETF in the world in Australia, brought it to Europe, then helped create the GLD in the US. And we were very well known for commodity products, platinum palladium. In fact, we invented the first platinum palladium physical products in the world. We own more platinum palladium in the world than anyone else at one point, in the vault.
Wow.
And took our business from 0 to 36 billion at its peak. And then that's where I met my current business partner, Nick. So Hahn actually stands for Hector and Nick. We've worked for 22 years now, over 4 businesses. And we left ETF Securities 2010, set up a business called Boost ETP, which was a short leveraged ETF provider. We got that to reasonable size, and a firm called Wisdom Tree wanted to come to Europe. They didn't have a business or a team in Europe, and they effectively bought Boost and us. And we rolled that into a new entity called Wisdom Tree Europe, which we co-owned with Wisdom Tree. And then they bought us out of that after 3 years, and then we decided to do Hahn. So I think we're the only management team in the world that have created 4 ETF brands from scratch successfully. So I'm pretty, and actually, interestingly, there's very few entrepreneurs in the ETF issuance space in Europe. Most people are big banks or big asset managers, where the US is different. US has got a lot of entrepreneurs in the ETF space, but not Europe.
Yeah. I mean, was there a specific challenge or opportunity you saw when you found Hahn ETF? I mean, you're now pretty much leading the active ETF market.
Yeah, no, I think what's interesting about Hahn and why it's different than our previous businesses is that we were, pretty much selling our own IP in the past, our product ideas, our own sort of product development. Whereas when we've always looked at the ETF business, we always see what's happening in the US and sort of say, well, Europe follows the US sort of 3 to 5 years behind, so what's the opportunity, particularly because when we left Wisdom Tree, the market was a 15-year-old market, much more mature, a lot more players, a lot more competition. So you've always got to find the niches, because obviously you're taking on, pretty much the biggest and ugliest, most cutthroat companies in the world, like BlackRock and Vanguard, right? So you have to see where your niches are. And certainly we felt that in terms of the US, the markets has grown immeasurably, much more than Europe, 500-600 issuers. And we felt that the market has gone to the point now in the US where the mutual fund is no longer the go-to tool. the US Army Pension Fund has ETFs, the US Post Office has ETFs, even just ask Kevin the YouTuber has his own ETF in the US, right? So if Europe's going to go to that, we felt that the only way that could succeed is if you can create white labeling or infrastructure renting, and we felt we could be the first parties involved in that. And what's really interesting is that if you look at the European footprint, our COO, Manoj Mistry, who's in the business here, invented the first ETF in Europe. He invented the Euro Stocks 50 and Stocks 50 that was part of the Merrill Lynch Leaders Program. And myself and Nick created the first ETC in Europe, which was the gold product. So both of the two structures make up 100% of all the ETPs in Europe. So we've got both parties who've created this first structure in Europe. So there's no more level of experience you can have to offer and sell to clients than that. And we just felt that the sort of, the ETF market generally had gone from being sort of very passive orientated to, being much more open for, whether that's sort of more like defined outcome or structured product type stuff or active, et cetera, et cetera. So the door had opened because everybody had sort of avoided the ETF market because you're always going to have to beat iShares and Vanguard. It's very hard to beat those guys on scale and cost.
No, they're volume.
Yeah, and volume.
Players.
But as soon as you go into the active world, it's more about IP, brand, and content. So the door opens a lot more widely on that basis.
Yeah. I think you were also one of the first, or the first one, of a cannabis ETF in Europe.
We were, yeah. Medical cannabis.
Medical cannabis, sorry. Yeah. Let's qualify that here.
We did try for broader cannabis, but needless to say, the regulators slow walked us on that. I think it's still in the Central Bank of Ireland now. They still haven't given us any comments on the filing, even though in Ireland, you can have a product that's legal as long as it's legal in the countries where the securities are listed, So by theory, it was fine, but they've never replied to us on the general cannabis product. So we're still waiting.
Might need to get them on the record here.
Exactly. We need to organise a party, I think, and then see whether that loosens their lips. But there you go.
Now, if you had no restrictions in a sense, and you could launch any ETF tomorrow with only any constraints, any fun idea?
I think we've always got great ideas. I think one of the major frustrations in Europe is how accessible the crypto space is for investors, through, unregulated so-called, crypto exchanges. But, you can't do the same products in regulated products listed on a regulated exchange through regulated brokers. There's restrictions on the regulated side, but there's not restrictions on the unregulated side. So I think, probably my want would be to be able to provide much more access to the crypto space, and then obviously be able to delineate and differentiate between the real, utility value crypto and the, for want of a better word, and the dodgy crypto end of the market.
Pretty much anybody can set one up. So yeah,
exactly. So I think that would be probably the area, because ETFs and ETPs are at their most powerful where they give market access to difficult to access asset classes for the end investor. I often say to clients of ours that when they issue an ETF or an ETP, it's the first time my mum can buy their products, and get access to it. It's probably the most democratic structure that you can get from that perspective.
It leads me a little bit back also, like what we just discussed, but also on the active side, transparency versus protection. How do you see this? People who really have an active management, do they want to give away full transparency what always happens? How do you approach that? What do you think is the best solution for them? On the other hand, just seeing what somebody else does doesn't necessarily, you can re-engineer his logic behind it.
Look, I think it's got relevant arguments on both sides. Interestingly, the transparency argument is something that the ETF market has used to beat up the active world when it was really just passive products, and it's very convenient. And the only reason ETFs are transparent is because you get the ability to give your holdings to market maker daily. It was like a requirement, And I've always said to the regulators, if it's such an important tool to have, transparency, why don't you retrofit it to mutual funds then? Because most mutual funds are monthly or quarterly.
You get the top 10 holdings if you're lucky.
Exactly. And if you think about it, if you found, on an electric car, if you found a safety feature that was as applicable to petrol and diesel, like an airbag, you'd apply it to all of them, wouldn't you? You wouldn't differentiate. Yeah. But I do think, in discussions with some of the active managers, particularly where you have concentrated baskets and very conviction-related strategies, it probably does make some sense to be able to have some protections there. And I think actually when you talk to end investors, they actually want that as well, because they don't want to be paying, because these tend to be a bit more higher fee than the more competitive areas of the market. So these investors sort of say, well, I don't want to share that with everybody, right? I want to keep that to myself and to the firm I'm using. I think the central bank actually announced last week that they were going to allow a principle-based approach to non-transparent or semi-transparent ETFs. So the funny thing is in the US is that's the way the market went fully at the start when active came along, but it never really took off, so the market voted with its feet, and largely every product's transparent now. So I think from that perspective, I think it's probably going to be a niche area, but I think there will be something like maybe like a small cap high conviction or an EM frontier market high conviction fund. I can understand why you want to keep like a transparency in that, on the basis of just protecting your thought process and your IP.
The other thing I wanted to ask you on is sort of liquidity. Are you worried about it? I mean, there's 1,800 plus ETFs now out there, and I think, the majority of them are all market making by the same people, or a big chunk of it. Is there a risk of that there's too much concentration in the liquidity providers?
Yeah, I think, I mean, obviously working for Susquehanna in the past, it's an area I know very, very well. I mean, what I would say is that is one area we don't extol the virtues enough from a competition perspective versus mutual funds, because the traders at the Jane Streets and Susquehannas, they're going to be pretty much the smartest guys on the planet. They've got the best technology, it's an arms race, that business. And essentially when you have an ETF, the portfolio management gets outsourced to those guys because you sort of tell them what the basket you want. So I'd much rather trust those guys, to do an EM corporate bond trading than I would, Fidelity's internal dealing desk, right? So, I do think you get, a high level of expertise in that. But you're exactly right. It is a choke point for the industry. And, if someone like a Jane Street ever got into trouble in the markets, then I think you would find that that would be a massive failure point for the ETF market. Funny enough, I've often advocated and thought that the exchanges actually should get together and build a utility market maker, one that's not particularly focused on, taking proprietary positions, but, just acting on the utility of being delta hedged and providing liquidity, because they've all got the big enough balance sheets to do it now. They've got the technology. And I think a utility market maker, either per exchange or jointly through the exchanges, could be a solution to that.
So far the response has been muted, or is...
Yeah, interestingly, if you look at things like the TMX buying Vetify and, NASDAQ, how it's diversifying its business, they're definitely calling, getting more into what they're calling issuer services. But obviously, the Jane Streets and the Flow Traders are huge clients of the exchanges. So I think it will be a big leap for them to do it. But I do think the market does have to address that. I mean, the other choke point is obviously custodians and administrators, for similar sorts of reasons. But I do think market makers is probably the area, particularly as you're saying, it's proliferating products left, right, and centre. I mean, there was a catastrophe bond listed in the US last week, and they had to launch without a lead market maker in the US. I think their market maker has been okay, but the US has a lot deeper liquidity pool than Europe does. So I think Europe would need especially because we have the fragmentation of exchanges in Europe. So there is definitely a little bit more of a challenge there than the US.
I mean, what other sort of trends do you think, or what keeps you awake at night? One or the other?
Yeah, well, I mean, obviously being an entrepreneur, that keeps me awake at night a lot, because obviously it's my own capital and my business partner's capital that we put to work. But then again, there isn't many industries you can invest in that's got a 30% CAGR for the last, 20 plus years, and doesn't look like it's getting any less anytime soon, and it's a very innovative industry. I mean, I am very proud that we employ, 45, 50 people all across Europe. We see ourselves very much as a European firm. In fact, tomorrow we list a European defence-focused ETF. We've done a global one with the ticker NATO, but we're doing a European defence-focused one with a ticker Army, because you've probably seen Wisdom Tree did one recently, and there was quite a lot of kickback from that because a lot of investors were very anti giving a US firm investment to put into European defence stocks, given the geopolitical reaction from Trump and also what potentially his reach into that firm as well, and policy. So we were actually inundated with Reddit requests and various things for us and other European firms to step up to the plate and bring one out. So we're actually listing that tomorrow, hot off the press.
And you are stepping up to the plate.
Exactly. Great ticker as well. It's going to have the ticker Army.
No way.
which is pretty good. Yeah, yeah. So in on the London Stock Exchange, you have two quotes. You have a sterling quote and a USD quote, and the USD quote is Army, and the sterling quote is Navy. So you're able to get Army and Navy, and then we've got NATO for our global product as well. That's one of the fun things about ETFs is coming up with tickers for sure.
Speaking of innovation, sort of a little bit, and I'm probably come from a little bit my background where I'm working with sort of ETFs versus actively managed certificates. I mean, in some places they start getting closer to each other. You know, if you have a listed AMC, it becomes an ETN. If it's, you know, securitized, it nearly becomes like the same format that an ETC has. What do you see happening there? And is this something you want to make use of as well in your business?
Yeah, look, I mean, we've looked at AMCs a few times because they are nice stepping stones to ETFs. I mean, you know, the Gen 2 guys and the ETI products. In some ways, when people talk to me about tokenization, I sort of say, why do you need tokens? This stuff already exists. You know, an AMC, an ETI, all those things are you know, they get a nice in. One of my early jobs at London Stock Exchange, I ran the securities master file at the Stock Exchange. I was one of the guys who were part of the original group that invented ISINs. And the London Stock Exchange had a very useful code called the CDOL.
I remember that one, yes.
And we used to get a lot of requests for CDOLs for people who want it for fine art or for vintage cars or whatever, you know. So to me, using the CDOL like that to put on ledgers and portfolios was very similar to an AMC or a token. You know, it was a way to actually get it into your ledgers and value things, you know. So I think ETIs and AMCs have a great role to play. If we had more bandwidth and more ability, we would probably look at that space a little bit more actively. But I would say we probably had over 3,000 inquiries for people who want to do ETFs since we started. I mean, most people think they've got alchemy and we should pay them rather than the other way around. Probably the major hurdle has been cost to people doing an ETF, and it's hundreds of thousands of dollars, you know, before you break even. And I think that's where AMCs come into their own, really, that they're so scalable from that level.
You can start building your track record, yeah.
Yeah, start building your track record. So I think they've got a great role to play. I mean, the only problem I suppose they have is they don't have the harmonised passporting or registration process. If it had that, then I think they will be a lot more attuned to what people need.
Yeah, different countries, even they're part of the EU, treat them differently in a sense, yeah. Besides cost now, say, between AMCs and ETFs, so sort of what advice would you give to an investment manager considering launching their own ETF?
Look, I think you've got to be prepared for a 3-year payback. Like any investment product, you know, you can't time the market all the time. When market cycles go through market cycles, you've got to hit that sort of 50 million level AUM. We work best where clients have stories. We work very closely with an asset manager called Sprott out of Canada, who are very famous for resource products like uranium and copper and gold. We did a physical uranium trust for them recently, where we listed out in London and Germany. You know, they've got really strong stories to tell, and that's the storytelling is what can differentiate you from an iShares or a Vanguard. You know, who are, you know, effectively Walmart. You know, you can turn up, buy a box of strawberries or a pack of bacon or a pair of jeans. You know, it's not going to be the best, but it'll be good enough, and it'll be about cost and scale, right? You know, whereas we have to go out and do the Whole Foods story. We have to give a better reason for clients to turn up and spend a little bit more money and get a better service, etc. So that's it for us. So we're not going to be the Eurostoxx 50 guys at 2 basis points cheaper than a Monday. You know, that's not going to be our business. You know.
Yeah, that's going only one way, basically. 3 questions I always like to ask everybody at the end of the interview is number 1 is, what is your definition of success for you personally?
Yeah, really good question. I mean, I've had 2 exits already in my life. I'm over the mid-50s now, so you know, from that perspective, I don't have any more of these in me. This is the last one. So I think for success for me for this would be, I would hope we could get a valuation of over 100 million for the business, dollars, pounds actually more than dollars. So, you know, maybe 100, you know, pounds, $150 type stuff, you know. And I think that's not really from a perspective of wealth. It's more from a perspective of achievement, you know, because my previous businesses have been in the tens. And then just really enjoy it, you know. I mean, we often say to our staff, you know, well, you get a free MBA when you come to hand, because you don't just learn about the product and what it's all about, but you will learn how to set up a business and you know, create a business. I would say there's no they in our business. When you've got a big faceless management in your company. They've done this, they've done that. If the bins don't get put out or the meeting with the CEO of Goldman Sachs doesn't happen, it's because we haven't done it. So, there's no they in the business. So I want everyone to come out here. And I often go to industry events like ETF Stream or whatever, where I think 25% of the room are my alumni that have worked for me at some time. And seeing how well they've done, some of them even better than we've done, that's very satisfying. And I always say that the difference between when we set an ETF business up versus other people, they're sitting in a big bank or big asset manager, so they're pulling the pieces of string together, the ops, compliance, marketing, etc. Whereas, Nick and I sit in Starbucks and say, let's do it. We don't have a laptop or a checkbook or a name, so every rivet that's gone in the boat, we've done it. So I think it's, success would be that sort of valuation point, seeing the staff succeed, enjoy it, and creating a lasting brand in the market. Really, I think that's the thing.
You definitely have a brand very well known in the market. The other question always I like to ask is sort of what is on the top of your current music playlist when you, I don't know, get in the car or exercise or train for rugby? I don't know.
Good question. So I'm a big 80s man. So my two favourite bands are the Smiths. So I'll always have a good Smiths playlist there, and New Order and Joy Division. So Love Will Tear Us Apart by Joy Division is probably one of my favourite songs, I think, for sure.
It is an excellent song. If people want to get hold of you, what's the best way to get hold of you?
I would just come in through info@hanetf.com. People think it's really weird, but I answer every info box email personally.
Wow.
And I've always done that in every business I've had.
That's very impressive. Thank you, Hector, for taking the time. Thank you.
Thanks very much. Thanks, Stefan.
The Vesta Securitization Podcast with Stefan Wagner, unlocking investment innovation. Vesta's end-to-end platform enables securitization providers and investment managers to streamline the life cycle of dynamic investment solutions, ensuring better results for their clients and their operations.
The information in this presentation is for informational purposes only and does not constitute an offer, solicitation, or recommendation to buy or sell any financial products. It is not intended as investment, legal, tax, or accounting advice. Always seek the advice of your financial advisor or other qualified professional regarding your investments.